All right, how are we doing, everyone? Hope you're well. In this video, we're going to talk about confirming your setup. So we've spoken about pretty much all of the process now in terms of finding a trade, finding the risk management and the targets, the stop loss, everything to do with actually formulating trades. Now, what we're going to do in this video is finalize all of that by talking about confirming your setups. So I'm going to show you a few examples. We're going to start with this one here on EURUSD. So if we look at the chart currently, we can see very bullish market. We've come in, tapped this key level, reacted, moved down, showing that we could potentially be moving into a downtrend. But what's actually happened since then is the market's come up, formed a lower high, okay? But it's actually then formed a higher low. And then we've actually seen a higher high form. So this here is essentially showing us a shift in the structure back to the upside. Now we come back down, nothing is confirmed yet, but because we actually fail to push through this low, and in a way, with the candle body closures, do form a higher low, especially reacting in this demand zone as well. This could then tell us that we could potentially begin a move up. Now, I wouldn't be buying from down here using my personal strategy, but what I would be doing is actually identifying to see, right, will this market get over that resistance, that key level? And as we can see, we came back up, we formed a new higher high, which is here. So that is a continuation of the upside structure, okay, where we go higher high, well, lower high, higher low, higher high, equal low, higher high, all right? So because we've respected the demand zone, we've formed these two higher highs, we can see that the market is then trending upwards. So from here, what I would be looking for, as I don't want to buy into a key level, we would essentially be buying resistance, is wait for a break. And if we can see a break, and by the way, we are on the daily chart following that top-down approach, if we can see a break and a closure over the 1.19250 level, and I mean, as well, the 1.195 level would be nice as well. As we can see, this whole zone here, if we can see a closure over those key levels, notably the 1.19250 though, because that is what has acted as a resistance in the past, okay? If we can see a closure over there, that can then show us that we are still trending up, because that's going to show that there's buying pressure stronger than there ever was here, managing to actually close over those levels, right? So the top-down approach is showing us here that the Euro USD market is bullish. We've got higher highs, higher lows forming consistently. And now we've seen a closure over the resistance, over this whole resistance zone that we were focused on. So from here, we could be interested in looking for a buy, all right? At this point, we would look to scale down, and we'd generally be looking for a retest of previous support points. So as we can see, we have that resistance, the 1.19250, which has given way. We can also see here that we have this doji. Now, on the daily chart, that is essentially going to tell us that there's an indecision phase or a consolidation phase. And as we spoke about in the supply and demand, dojis can work as supply and demand areas. So it's quite a big one. We'll probably refine it more on the scale down, but we can see now we're uptrending. We've seen a push of structure. This could potentially be a place to actually look for a long. So bringing it into the 4-hour chart, we can see then the bullish structure taking over. You can see that the doji that we printed on the daily chart is essentially this movement here, where we had uptrend and then we had a pullback and then a push higher. So this is our kind of demand zone area. Now I could say this could probably be cut down now that we've scaled in. We can see the higher precision area, which is going to be that point there, really, the candle bodies of that correction move, okay? So that's an area of interest. Now, we don't have a setup yet, but if we can see a pullback somewhere into this key level and this demand zone, we could then look for the confirmation and begin to actually take trades. So we'll allow the market to play out. Remember, if there's no pullback, if there's no correction, no good level for us to get in, then there's simply no trade. We can be patient. We don't have to take a trade every day. We don't even have to take a trade every week. We only need to take trades when there are good trades present. So being patient has seen this market push back into this area. Now, what we have to be careful of is that we actually get a reversal. And this is why the confirmation is so essential. And that's really what we're talking about in this video. If you didn't wait for the confirmation here, this market could easily plummet through, take out this low, and then actually put us back into a downtrend, because we'd have done what? We'd have taken out the structure, okay? So the structure, higher low in the market, would have been taken out. That would form a lower low, sorry. And then the chances are, because we are under such a key resistance, we could come back up, form a lower high, and then continue tumbling. So this is why confirmation is so important. We have to wait for the market to give us what it is that we need to see. All right. So we either bounce from here, confirm, and that is what we're looking for, or we push through. And that is why we have to wait for confirmation. So letting this chart run for a little bit, we can see the 4-hour chart gave it a push up. Now, this is the time where you'd really be looking for the most suitable time frame. So in this example, I would generally scale it in further than this. I'd want to see how the lower time frame structure is actually performing. So what I'll do is shift it down to the hourly chart and see what we can see. Now, you'll notice we reacted out of this demand zone quite nicely off the key level. So this is essentially exactly what we want to see. But we do have what? We have some barriers. We have a supply zone at this recent structure high. And we also have that key level, the 1.19500 key level. So if we can see these two levels give way and a push over and a closure over the 1.19580 or so on, somewhere around there, just closures higher than the previous structure high, that is then going to confirm that we are in an uptrend. We do have the good structure. Okay. Now, some people may be interested in buying on this bullish engulfing. So you can see down here, we printed a bullish engulfing, but myself, I'm very conservative. The approach I'm teaching you is very conservative. We like to focus on the structure before we actually go for the moves. So if we can see the structure shift and then a confirmation, that is where we'll get into the movement. All right. So letting the market run, we'll see. Okay, we've managed to close over that level. If we can get a pullback down somewhere now, either retesting this level and demand zone, as you can see, it's a supply zone which has been surpassed. So this could very well act as a support now and as a demand zone to actually push price higher. Or we'll be looking for a retracement further down into this zone to come and test these lows. So we have to think about any possible scenario that comes through. We've seen bullish structure shift there. So that's a good sight to see. And now we are actually seeing some bullish movement. So what I will be interested in seeing, because this reaction has been quite good and has respected, this consolidation zone is probably going to form a nice entry for us. All right. So focusing on the consolidation, focusing on the supply and demand always. So we're going to be looking somewhere around there. In fact, I'm going to leave that level on because I do think that that has some validity as well. Somewhere into here, if we can come into here and then confirm, then we can go for it. Now, this itself, you may be thinking, is this a confirmation? Generally, yes, it would be. It is a shift in structure that we've spoken about. So this could be an entry for you. But personally, for the precision, when I see a zone like this and then a shift in momentum out, I generally expect that we're going to come in and retest this level. So if you want a more precise entry, albeit it's not going to be too much more precise because an entry there would have been fine, we can actually look for a more pinpoint entry for our trade by just waiting on that zone to be retested. So we see the market come down, tapping close to that level, and then okay, we have this big bullish push. Now this big bullish push is to me an indication that the market could begin to move higher. Okay, we are in an uptrend. We are facing this small resistance, but obviously because of the overall flow of the trend, this is essentially a higher high. We are now expecting a higher high to form. So we could go ahead and look for a trade off this level. Okay, so you would have got a more precise entry here, but this one is stronger confirmed because we've seen the retest and now the push up begin. So for a move like this, I would generally look to keep it beneath the zones. So we may be looking at around a 45 to 50 pip stop. Now I'm just going to give it 50 just for, the maximum conservatism or, making sure that we keep it safe. So I reckon 47.5, 47 pips is a great stop for this one. Now that clears both of these zones, so that if we do come back down beneath these, we'll have to reassess an entry. But for me, this looks good. So target-wise, I haven't completely identified a target for this one, but we are talking about confirmation, so I don't want to run off track too much. But let's see how this trade plays out, see if we get anything good out of it. Okay, so as you'll see, the trade begins to move. Now, the reason we entered there is what? All the principles we've spoken about before. We have, of course, the uptrend, the daily chart, the top-down analysis showing us that we've broken over a key level, which was this movement here. Then we've seen a retracement, a retest of that key level, where the first entry, but not the preferred entry, formed on this bullish engulfing. Now, obviously, you could have got a great risk-reward entry here. So maybe that's something that you'd be interested in doing in your trading. But myself, I do like to see the structural shifts first. So when I see this high give way, retest, push up, retest of that zone, that is really when I'm going to get confident on the trade. And another important thing to mention is you don't have to worry about trades running away from you. Okay, you might have seen this big bullish candle and thought, damn, we've missed the trade. But to me, this big bullish candle is probably the best place to enter because it's engulfed 1, 2, 3, 4, 5 previous candles. Okay, and it's also allowed us to actually see that retest of that zone. So this big bullish structure shift for me would be my favored place to enter. We can enter, stop beneath the zones because we know we're moving in an uptrend. And if we do take out these zones, we probably want to reassess the movement. And obviously, as we know, losses are fine. We have our risk management plans down. So we can allow for the losses. We can allow for the risk. Now, it's not that we are taking a gamble on this movement. We have the maximum confirmation that we could really get. But unless the market runs lower than this, we're all good. So we can use this stop. It's only 47 pips. And now we can actually look to take some larger upside targets. All right. So for this movement then, let's just see how it plays out. You can see the uptrend continues. Very, very nice. Our random hypothetical target, I believe, is now being hit. Yeah, there we go. So that's great. So that is a 2.83R move. Now, if you're risking 1%, that's a 2.83% move. If you're risking 2%, what is that, around 5.6%. So really, really nice. 5.6% move secured from the 1st of December through to the 3rd of December, that would have been. So 2 days, and you're looking at over 5%, which is a really, really nice movement in the market. And it's heavily confirmed. We've seen really good confirmations. We've seen really, really good price action, actually leading us to this point of profit taking. So there we go. That is one example of actually confirming your movements. And when you find a move, when you do the top-down analysis, you find the levels of interest, you find the zones, you find the market structure. That is how you're going to find your confirmation. Okay. And we've actually seen here 3 examples for entry depending on your risk tolerance. If you have a high risk tolerance and you are a risk reward hunter, you're looking for the best risk reward possible, then an entry like this could have been very favorable for you, seeing this bullish engulfing right on that key level. Personally, that is not entirely my style. Now, let's have a look. If you'd have taken a move like that, you would have secured significantly higher risk reward, 5.8. So you could have made 11% on that move. Now, that all comes down to your risk tolerance. If you don't mind taking a few more losses in the hopes of catching a bigger risk reward, which will balance itself out, if that's your trading style, then this can work as well, right? We saw the key level retest, we saw this demand zone retest, and we saw a bullish engulfing. So everything lines up. But for me, my personal trading style, I do love to see the structure shifts first. So seeing this hourly supply zone turn to a demand zone, then seeing it retested and a huge bullish momentum shift, that really tells me that there is strong strength behind this movement. So I'm happy to execute there, accept the lower risk reward, and go in for a much higher probability trade. Okay. Because if I do that, I don't have to encounter so many losses. It's less mentally tolling. And to me, 2.83% in a couple of days or 5.6% in a couple of days from just entering a trade and allowing it to run and knowing that it's a very high probability trade is more than enough profit. Okay. So there we go. That is Euro USD. Now, let me just talk through the 3 entries. We have that one for the risk reward hunters, for the people with the higher risk tolerance who don't mind hitting a few more losses in the chances of catching the huge risk reward moves. We also had this bullish momentum shift. This could have been an entry as well. That does support the momentum shifting through the structure. It does support the shift of momentum from this demand zone upwards. So this could be a move that you would take. Now, you might want to go for the stop beneath the low on this one so that you can actually maintain a highly probable entry, because the thing with this one is we have seen a momentum shift, but we haven't seen a retest of the zone. Okay. So there's nothing to say that this could come up and then come back down. So for this example, I would probably look at keeping my stop loss beneath the low personally, but the entry for me really is going to be this one. And yes, it's later than the other two, but that doesn't matter because the risk reward is on point. The move is heavily confirmed, way more heavily confirmed than these other 2 previous moves. And for a conservative trader, that is more than good enough entry on a movement. Okay. This one for peace of mind, this one for higher risk reward, and this one for the real risk reward hunters who don't mind taking a few more losses. So there we go. That is confirming your entries. I will find one more example as well, and we'll talk through that just now. So the next example we're going to look at is here on gold. So gold is a pair I really like. it is a little bit of a wild one, and some people do struggle to get to grips with gold. Now, something coming in the future is going to be a gold chapter for the course. So if gold is your thing, there's going to be a lot more knowledge dropped in there 2021. So looking at gold then, this current move we're looking at right now, we've essentially seen a retest of a demand zone. Now, if you see here in the movement, we've got this demand zone move. Obviously, also lining up quite nicely with the key level. That would be the 1775 key level, which has been retested. Now, as we can see, we do have this little zone down here that could get tested into, but our real focus for this movement is the fact that we've respected a key level, we've respected the demand zone, and then we're actually looking like we're shifting structure. So the movement we'd be looking for on here, just going to bring it down to the 4-hour chart, obviously bringing it back to the structure that we talk about. We're in a downtrend, okay? Lower lows, lower highs consistently. Now, what we have here is a lower high in the market, also a supply zone. If this can give way, that is then opening the doors to a reversal. So this is all about formulating the trade idea, all right? Not a trade you're going to put your money into yet, but a trade idea. We know that we are trending down on these lower time frames, but we know that we've retested a key level and we've also retested a demand zone on the higher time frames, like the daily chart. So from here, we can look at this zone and think, okay, if we reverse and push lower, there is a chance that we're going to push through here. But this level has a lot of validity, being a key level, rounded off 1775, and being a demand zone. Sorry, if we do shift structure from here by taking out this high, we can then actually identify some long positions, either on a pullback or on a retest of this level. So if we then allowed the market to play out, we're either looking here for a rollover to the downside, in which there's going to be no trade present for us right yet, but otherwise we're looking for a push over the high to confirm some upside. And if that happens, we can then actually go ahead and look for long opportunities. All right. So allowing the market to do its thing, remember patience is key, we will see a bullish structure shift to the upside. Now, this is where the opportunities begin. You could look at this as an entry if you wanted to. It would work. It is a bullish structure shift. You could go put a stop loss under the low. Let's say we're targeting this pretty clear supply zone up here, 1950. Okay, so let's say we're targeting there. You can see the structure shift and enter right away if that was in line with your risk tolerance. So that's one opportunity. You could also wait for a retest of this zone. That would be my preferred opportunity, because the reason being, after we see structure shifts, we can get deep pullbacks. Okay, we know that now. So if we do get a deep pullback, this would actually take out the stop. Now, if first of all we saw a retest and then a pushback up from this level, that would then give us the confirmation we need to know, okay, the chances of this deep retest coming through is quite low because we've actually retested the zone. So once again, this is the higher risk tolerance entry, looking for the bigger risk reward. Stop loss under the demand zone, entry taken right off that momentum shift, and looking to ride this thing up towards that supply zone. So the other entry, the one I would be interested in the most conservative entry, so to speak, would be waiting for the two possibilities. We may get a run lower down here into this area, right, to retest, to then push higher. So for me, I wouldn't want to enter right away in case this comes and rolls down. I would either want to see a push down, retest, confirmation, and buy from there, or a push down, retest, confirmation, and then buy from there. So that is exactly what I would be doing. So watching the 4-hour chart, we see here pretty much exactly what I just said. Okay, we see hourly chart, 4-hour chart showed it brilliantly. So let's just keep focus on that for now. 4-hour chart shows us bullish push, bearish push down, retest, and then a bullish push. Now this bullish push brought us a bullish engulfing candle. So what you're going to get here is slightly, ever so slightly less risk reward. Probably about the same, to be honest, as the previous movement. Maybe even higher risk reward for this one, because we've seen this zone retested, so we can actually go ahead and put our stops under this zone and under the lows of the recent range. We've seen then a bullish engulfing, and it is a 4-hour bullish engulfing, so it has a lot of strength behind it. And what we can actually go ahead and do now is buy the market from here, knowing that we've seen a shift in structure, a retest, and a bullish engulfing candle showing the momentum is shifting to the upside. We can go ahead, buy this market, and allow it to roll towards our targets and see how it does. So I'm just going to stick this on auto run just while we discuss it. Cool, we saw another opportunity to enter there. As you see, cool, a couple opportunities to enter right now. Focusing on where we actually brought from, this bullish engulfing. This has then formed a little support zone, all right? We can see that this is consolidation, essentially like a demand zone. And what we actually saw was, I'm going to focus on it more as resistance though, just so you can see this. This little resistance point now turns support, retested, and retested. So if you miss the initial entry, that doesn't mean you've missed the trade. You could actually still buy this market using, a buy limit or the lower time frames to look for a retest. See if the lower time frames give us anything. Slow chart. Hate it when this happens. Okay, we did get given entries here on the hourly time frame as well. So as you'll see, we got a push down, bullish engulfing, which is also a bullish pin bar candle that could have formed an entry with a stop under the low or a stop under the zone for conservatism. Let's say, I don't even know if that's a word, but I'm using it anyway. So a movement like this, we see we formed this recent low, the retest, which is now going to be a demand zone. So you could go and put your stop under there. I wouldn't actually put my stop above that level personally. I'd want to keep it clear of the zone. So that would be a secondary opportunity to enter, which would give you very similar risk reward. And then, of course, the next opportunity to enter really could have been after the next retest. Or, if you'd waited for the structure shift, you may have missed the move. But of course, we saw we had multiple retests of this level, allowing us to enter. Okay. And then I'm going to bring it back over to the 4-hour chart and see how the trade runs. We can obviously look towards, another thing to mention while we're here is partial profit taking. So 1870 is a resistance that's currently reacting. Maybe you take a bit of profit now. We are running probably close to or above 2R on this movement. So let's take a look. Yeah, that is the 2R point. So you could go ahead and take half your profit and you've made back your risk. And then you can allow the other half of the trade to run to take profit. Just methods like this are very important for maintaining long-term growth. So will the market push through? All right, in this instance, we have come down, retapped the entry. That probably would have triggered you out for a break even because by the 2R point, you're most likely going to be on a break even trade. But you would have taken, as mentioned just with the partial profit taking, you would have taken some profits anyway. So say you risk 1%, you'd have taken 1% off the table and allowed the other 1% to run in case it could achieve the target. Now, this is the importance. I know this is a separate video, but it just brings it back to the importance and how everything works together. The importance of actually taking partial profits, all right? Don't just sit and hold and be greedy. If you've got good profits running, don't be wary to take some, okay? Take some off the table if you're at a key level. Now, the reason you need to make sure you're taking it at key levels is you don't just want to take profit straight away for no reason. Like, for example, if you got to here and you started taking profits, it's not really a wise move. But if you see this supply zone, resistance, that is an evident place that the market could reverse from. So seeing 2R, you could take your risk, leave your risk running as well with a stop to break even. You've got 1% locked in. You can actually then look to hold 1% out or 2% locked in and let 2% roll out, depending on whether you're trading 1 or 2% risk. Now, what we've actually got then is a pushback down, retest into this area. We could still see a move higher. I'm actually going to look at the hourly chart and see if this is going to give us another entry. Now, the reason being, we're still in line with the structure. We can see we've actually come in now. We retested, pushed up, pushed back down. This could be a higher high, pushing in to form a higher low. Now, as we know, if the structure gave way, that could potentially put us into a downtrend again. But while the structure is still up, we can still look for long opportunities. So this for me now would probably become a much less attractive opportunity just because we formed so many equal lows, so much consolidation around this same point. To be honest, probably won't be looking to take another trade from here until, of course, we showed that we had the strength to take out this previous high. So generally, I wouldn't really probably make too many more movements on this market. But of course, we did take some profits. We do always have the possibility to rebuy into this if it takes out the structure high. And as you saw, the confirmation once again, bringing us 2R on a trade into this resistance point. All right. So regardless, we've seen some really nice movements, really good examples of the confirmation we're talking about. See in the market, it does make new highs. It is making new highs. So it could therefore provide you with some new entry points following on from the lessons that we've spoken about. All right. So that's all for this video. We've spoken about confirming entries. We've spoken about key levels, demand zones, candle confirmations, everything you need to actually formulate an entry. And this brings us to the end of the processes chapter. Now, we are going to have another video talking about process pitfalls and just concluding this whole chapter as well. And then we're actually going to move on to advancing your Forex, which is just going to be another section where we talk about some tools that you can begin to use and other principles. I want to talk more about liquidity because liquidity is a big one. It's very important, and I want to make sure you all understand it before the course is up. So I will see you in the next video. Hopefully you've enjoyed this section of the course. We are not done yet. We're going to move into a little bit more learning.